What's up, everyone? It's Scotty with MoneyVest. So it's time for us to talk a little bit about PayPal stock here. I'll break down the earnings that PayPal reported and also break down the entire fundamental analysis, the guidance, the earnings per share, and what my fair value is going to be on this stock moving forward. I do still believe that PayPal is delivering some very good numbers. In fact, the earnings, in my opinion, were fantastic with some very strong guidance and year-over-year increases in the company's earnings per share, and revenue as well. But despite all of that, PayPal continues to struggle at the moment here. It did rally higher after the earnings, but then, of course, sold right back down intraday with a red candle. And, of course, since then, it's just been consolidating sideways at just over $66 per share. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. The first week of the month is the best time to join. And of course, you will have access to all the members-only private videos, including trade alerts and trade ideas, as well as our 30 stock shopping list, including my buy targets and my different aggressive buy targets, light buy targets, as well as my fair values as well. So links going to be down below if you want to watch. And I will be posting more videos in the month of May for members only. So first things first, let's talk a little bit about the numbers themselves. Revenue came in at just over $7.7 billion, 9% increase on a year-over-year basis, 10% on a currency neutral basis. First quarter 2024 GAAP EPS increased 18% to 83 cents per share, and non-GAAP EPS up 27% to $1.08 per share. Alex Chris, the new CEO appointed as of last year, basically mentioned that we delivered a solid set of results in the first quarter. I'm encouraged by the progress the team is making against PayPal's go-forward strategy and in strengthening our foundation. 2024 remains a transition year. We are focused on execution, driving our key strategic initiatives, realizing cost savings, and reinvesting appropriately to position the company for consistent, high-quality, profitable growth in the future. So really the idea here is for growth and for profitability at the same time. And that's exactly why I do believe that PayPal has a ton of potential moving forward. As I mentioned, as of last year, end of last year, I switched my entire business banking to PayPal. So PayPal basically facilitates all of my revenues for all my businesses. So again, it's been fantastic. I've never had any issues. In fact, it's actually quite a funny story. So when I went to the UK, right, recently, just a couple of weeks ago, I went to the UK and I was buying game tickets, match tickets for football, for a couple soccer games. And I had this contact, right, so who I thought was trustworthy because I had bought tickets from this person before. So I never thought that anything could go wrong. So I, sent about 500 pounds through PayPal just for the tickets for a couple of games. And guess what? That person scammed me, basically. So he never really returned my phone calls or messages or anything like that. It was kind of odd because I had bought tickets from him in the past. But this time he decided to, of course, not fulfill the order. So because I sent it through goods and services and not friends and family on PayPal, PayPal had a very, very, very smooth and streamlined process for getting a refund. I filed a complaint. I, essentially issued a claim or, started a ticket, and then within a few days they kind of contacted the seller. I had to explain my side of the story. I shared all the screenshots and everything of the conversation, and then within a few days I got an email that it's been resolved in your favor as a buyer under the buyer protection, and then of course they refunded all of that amount within the PayPal app and back into the bank account. So it was a very, very smooth and a very amazing process of not having to worry about whether I'm going to be able to recover my funds or not. Of course, it was an unfortunate situation overall, but the bottom line is that PayPal did have that buyer protection in place. Never been more happy as a consumer, both on individual basis and also on a business basis. Touch wood, knock on wood, I've never had really issues with PayPal here. Now, when it comes to the cash flows, so cash flow from operations, 1.9 billion, free cash flow, 1.8 billion. On a trailing 12-month basis, cash flow from operations of 5.6 and free cash flows of 5 billion. And balance sheet and liquidity, they're sitting on about $17.7 billion of total cash and cash equivalents, and debt about 11 billion. So they do still have a negative net debt, $6.7 billion more in cash and cash equivalents and marketable securities than compared to debt. And they also returned $1.5 billion of total cash to shareholders by repurchasing 25 million shares of common stock. And $1.5 billion repurchased approximately 81 million shares of common stock in the last 12 months as well. If you take a look at some of the year-over-year increases, so 9% growth in revenue, operating income up a little bit over 17%. We've got operating margin increasing about almost 98 basis points, so 1 percentage point here. And then we've got net income increasing about 12%. These are GAAP numbers, non-GAAP are even better. And then earnings per share up 18%, and net cash provided by operating activities up 64%. Adjusted free cash flow up 86% year-over-year. Free cash flow up 76% year-over-year. Earnings per share on a non-GAAP basis, 27%. Net income up 20%. Operating income up 15%. And again, net revenues up 9%. So, I mean, we have seen pretty strong growth here from the company, right? This has been, in my opinion, one of stronger quarters from a lot of companies. And PayPal somehow, for some reason, regardless of what's going on in the economy, they continue to deliver. Even if it's very modest growth, 9 to 10%, they deliver. And they have done that in the last, several years, several quarters. They've just consistently gone up in revenues, in profitability, and free cash flow and margins as well. GAAP earnings per share, $3.65. That's the guidance for fiscal year 2024 compared to $3.84 in the prior year. So we are seeing a little bit of a reduction here. Non-GAAP numbers expected to be in $3.83 based on the new non-GAAP methodology. And estimated non-GAAP amounts for 12 months ending December 31st, 2024. It reflects adjustments of approximately $490 million, restructuring charges of $175 and another restructuring charge of $70 million and $90 million in the second quarter 2024. So if you do the math here, PayPal trading at $66 divided by $3.83, we're looking at about 17 times earnings multiple for PayPal, which you could argue is a little bit on the higher side. I don't disagree with that. I think for a company that's actually growing earnings by 15%, 17 times multiple isn't crazy high. But yes, the PEG ratio is going to be a little bit over 1. This right here is going to be the revenue. Again, $7.7 billion in the first quarter. First quarter also, we did see a little bit of a dip quarter over quarter because of the holiday season coming to an end. Transaction margin coming in at 4% for the first quarter. And we are looking at $3.4 billion. And then non-GAAP operating income at just under $1.4 billion. Non-GAAP EPS of just a little bit over $1.08 per share, up 27% on a year-over-year basis. Active accounts, 427 million, so slight increase on a quarter-over-quarter basis. And then monthly active accounts up 2% to 220 million. More importantly, really the focus, in my opinion, needs to be the transaction per active account. So TPA at 60. I mean, this number has just been pushing higher, up 13%, driven by Braintree transaction growth as well. TPA excluding unbranded card processing, we're looking at 34, which is up 7% for the company as well. But really, it's the engagement that's been driven higher for PayPal. So if you come take a look at here, active accounts first quarter of 2022, 429 million. And now we're sitting at 427. So we haven't really seen a lot of growth in active accounts, but monthly active accounts, so MAA, it's gone from 214 million to now sitting at 220 million for the company, with transaction per active account, so TPA, gone from like 47 to now well over 60. So really the PayPal focus has been engagement of existing users. I'm transacting more on PayPal on a regular basis, and that's kind of the philosophy that they have, is to drive more engagement. Even if the growth in accounts is not that high, it's really the engagement of those accounts that's really going to be driving total payment volume. Speaking of, up 14% in first quarter 2024 to just over $403 billion, and total revenue of $7.7 billion. Of course, 9% growth here on a year-over-year basis. So total payment volume growing, transaction per active account growing, active accounts, monthly active accounts growing on a year-over-year basis. Revenue was up, free cash flow was up, and bottom line profitability was also up for the business here. So there was a lot to like in this report, and the guidance was also pretty decent. So if you really just kind of assume, a 5-year discounted earnings model for PayPal, and let's just say that their earnings guidance is $3.83, right? So we're going to do this here very quickly. Just 1 second. So really, the expected net income for the business is going to be closer to $4.2 billion. So let me just bring that up here very quickly. Just going to do this. And boom, boom, boom. That's the screen here that I want to go over. So there we go. So we've got, 400. Actually, let's just switch this number up. Just give me 1 second. I'm going to reload this page. Just got to switch this over once again. I don't know what's going on with my Excel spreadsheets here. Anyway, so this is where we are. If you come over to 5-year DEM, so PayPal, and we're going to switch this number to 4100. That's $4.1 billion for PayPal. Right now, of course, it's trading at around 16, 17 times price to earnings multiple. So that's what we calculated based on $3.83 in earnings per share expected. If we apply, let's say, a 16% growth here for the company, and then we apply, let's say, an 18 times P multiple, 12% discount rate, 10% margin of safety. What's going on? Come on, Excel. What are you doing? It's not working. I don't know why it says loading right now. Here, just let me see if I can reload this again and fix it. Because, let's see, PayPal. Yeah, it continues to show me as loading. I don't know what's going on. I got to share the intrinsic value here as soon as this becomes available. Yeah, it continues to show me like as loading. I don't know what's going on here. I've already put in the formulas and everything. But, yeah, Google Finance seems to be some type of an error at the moment. Anyway, so I will share the actual intrinsic value that's already being shared in our shopping list for PayPal. But I'm pretty sure it's going to be around, these prices where it's trading at the moment. But coming over to the technical analysis, I mean, a lot of consolidation sideways for PayPal in that range. Even though we have been trading this downtrending channel of lower highs and lower lows forever, we are now starting to see at least some higher lows. So this right here can be a higher low. This, of course, can be a little bit of a higher high for PayPal. So we're still within the context of a little bit of a reversal and a back shift in the trend of higher highs and higher lows. But really important resistance is going to stay put right over here in the $68 to $70 range. And if PayPal is able to successfully, let's say, break out of this, the next target is going to be at $76. So that right there is going to be that next target and that next resistance level to watch for PayPal. But I do believe that PayPal is stabilizing a little bit. It's consolidating. I think there's a lot of accumulation that can happen here at these prices with a long-term potential, of course, back up to over $100, $120 per share for the company. That's going to be a nice, 80 to 100% move to the upside. So no, the company is not dead. The balance sheet's fantastic for this business. I don't know what's going on with this Excel spreadsheet here. I got to fix it. Why it keeps on saying loading. But I do believe that, again, PayPal has a ton of potential long-term, considering that it's still reporting very good numbers. By the way, we just got the spreadsheet fixed. So let me see if I can pull it up here. There we go. Now it's working. So $4.1 billion, 16% growth rate, 18 times P multiple, 12% discount rate, 10% margin of safety. And let's say the company continues to buy back shares by 1% because they did buy a lot of shares, in the last 12 months. Now we're looking at almost $80 in the estimated intrinsic value with a $155 target on PayPal, which makes it about 19% undervalued. Even if I go with somewhat lower numbers, 14% growth rate for bottom line earnings here, which is possible in my opinion, and a 16 times P multiple, now we're looking at a price that it's equivalent to the market price with a price target of closer to $126, right? And that's going to be about 3% slightly overvalued for PayPal. So let me know your thoughts down in the comment section below. I do believe that it has a ton of potential, and again, it is a company that has a very strong balance sheet, so no, it's not going under, it's not going bankrupt anytime soon. And again, it continues to report some pretty good numbers, even though they did miss EPS by a small margin. The numbers were, in my opinion, pretty solid at the moment. So as always, make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. First week of the month is the best time to join. Happy investing. I'll see you all in the next video.